What's going on, guys? It's GBP baby. Welcome back to another weekly review. I hope everybody's had a good weekend, and yeah, let's get straight into things. So we're going to start on dollar as per usual, and last week we had up close week, and this week coming we do have a lot of high impact news. We have FOMC, we have non-farm payroll. So Wednesday through Friday I'm expecting a lot of volatility, but not much has changed in terms of my expectations of where the draw on liquidity is. But yeah, it's nice to see that we're going to move into the month of February, so I do believe the markets are going to loosen up a little bit. But I do have my eyes set on these relative equal highs for buy side liquidity. It's going to be nice to see if price can finally push into that in the new week. And another thing I want to bring our attention to is the fact that we are at 50% of the current trading range. Now, what do I mean by trading range? On the weekly, we are currently in this trading range. So from this high to this low, you'll see that we're just about hitting that 50% level where I'm expecting us to push through it, and like I said, run these relative equal highs and start running up towards this bearish order block. We also have a volume imbalance right here that I do believe price is going to want to fill. Now, I'm not saying it's going to do it this week, but in general I am anticipating price to want to start trading into this range. So overall, that's my general direction and expectations. Now there's a few other things I do want to bring our attention to, such as this inversion fair value gap right here. So you'll see our price delivered on the downside, and then we've closed and traded through it on the upside. So now I'm looking for this to provide support, and you'll see that last week we saw that beautifully. So if I do mark out that midpoint, that middle line, you'll see our price traded down into it and then moved away from it, which is what we like to see. Another thing to take note of is that we rebalanced with this wick as well. So if you look at the 50% level of this, you'll see our price traded down to that and use it as a reference point to move away, and like I said, start pushing towards that buy side liquidity that we've had our eyes set on for a while now. Finally, I do want to bring our attention to this gap. Now, you can't see it visually here that well. Let me see, if I zoom in enough, you can see it. There is a gap between this high and this low, and the fact that this wick from last week failed to trade into this wick's high, again, this is all bullish behavior and bullish fingerprint suggesting that price wants to move higher, because it's failing to fill in bearish imbalances, as in this is below market price and it's failing to close those imbalances. So these are all little fingerprints in price action which are allowing me to start to frame the new week and expectations. And then another thing I want to take note of is the midpoint of this wick. Now the reason I'm drawing out this is what we're going to call consequent encroachment. This is the lowest I anticipate price to trade to so long as we're bullish. So long as dollar wants to move higher, this is going to be the lowest I want to see price trade to in the new week. This is purely here, so I know this is the lowest in the new week I want to see price trade for me to remain with a strong bullish bias. So let's drop down to the daily, and you'll see that level is now delineated here, and that weekly inversion value gap is also clearly delineated. So you'll also see that the weekly consequent encroachment is lined up with the midpoint of this wick as well, which is perfect to see. And again, this is the lowest I expect price to trade, because wicks are gaps too, and if we're bullish, the 50% level should be respected. Even better, the 25% level, like what we've been witnessing. But it would not surprise me if price does want to come back down one more time, grab more stops so that we can again distribute them at higher prices. So Monday and Tuesday of the week, I do want to see manipulation. That means movement in the opposite direction to what we anticipate. And again, this will be the lowest I'd want to see price trade at all. So yeah, you can see how we've been consolidating a lot of back and forth price action. I do have my eyes set on these levels around here. I'll show you on the lower time frame actually. So you'll see that there are relative equal lows down here, and as I was saying, price may want to come back down to this weekly consequent encroachment, and that would make sense because we have engineered liquidity down here for price to potentially come and grab. So if that's the case, we do have a nice bullish order block here on the hourly, and let's not forget this is a breaker from this low to this high. These two up close candles do act as a breaker, so price can wick down into this breaker as many times as it needs before expanding to the upside. So I'm going to bring our attention back to this breaker because I was speaking about this last week, if you recall, just so that we know that price can come back down into this level before moving higher. So long as, if price does reach down here for say the manipulation of the week to create the Judah swing, if price does do that, then at least we know that we can start looking for buys on dollar for us to be long, with an expectation to reach for this buy side liquidity and the relative equal highs we're starting to form up here. That's going to be everything on dollar, I believe. Let's now go to GBP. We'll start on the weekly. And what you'll find with the weekly, there's a lot to talk about on GBP. GBP took out the previous week's high, which is interesting to see, but one thing to take note of is the fact that we're still respecting this wick. Now what I mean by that is that the 50% level of this wick is still being continuously respected. Here we respected it, here we respected it, here we respected it, here we respected it, and the volume is respecting the 25% level. So this is all bearish behavior. Although we're spending so much time up here, it's typical for this month, January, but with us moving into February and with all the news we have next week, it would not surprise me at all if we finally saw some kind of expansion lower. But it's nice to see that we had some closing below this wick, and again we've got some liquidity that's building up below here and below here. So let's draw out this first as sell side liquidity. This is more for long term, I believe, objectives. And then we also have this swing low now, and as a more short term objective as well. So it'll be nice to see if that can get traded to. In terms of the new week, the highest I'd want to see price trade to again is going to be 50% level of this wick. I'm going to get rid of this because I was just showing you for visually see it. But here is consequent encroachment of this wick, and the reason I expect price to respect this is the same reason I showed you on dollar. Again, wicks are gaps too. If we're bearish, the 50% level of this gap, well, wick, should be respected. So that's why I have this delineated like so. Now let's go to the daily and have a look where that comes up, and you'll see again we've taken out yesterday's swing high and yesterday's low, and we do have an overall bearish bias. Last week I was also bringing our attention to this breaker, and you can see our price is continuing to respect that on the daily as well. In terms of volume's respecting the 50% level, and you'll see as ICT has constantly said, it's the wicks that do the damage, and this is what I mean. Wicks have taken out all of these highs constantly, all for this whole consolidation. But it's nice to see that we're finally closing below this breaker, suggesting, you know, some expansion is imminent. So yeah, I do want to see lower prices. Again, manipulation, I wouldn't be surprised if price wanted to come up here. That's completely fine. Remember, we're allowing price to reach this level, which is fine. Let's go to the 4 hour, and you'll see that that lines up again with this bearish order block. So price can return into the order block, preferably 50% level off the order block, but you'll see that lines up pretty much with that weekly consequent encroachment, so nothing too much there. But this will be a mean threshold of this 4 hour order block, so we can get that marked out as well. We should be able to hone in on the exact levels that we're looking for the high of the week to potentially get made. Let's go down to the 1 hour time frame, and you'll see that this mean threshold, is lined up perfectly with this breaker, high, low, higher high, and you can see we've broken lower, making this block a breaker block. So again, in terms of manipulation, if price does want to rally, this is the highest I want to see price rally, and then I'd like to start looking for shorts. Shorts on pound within this range for us to again run for these lows and these relative equal lows that we also have down here. These relative equal lows are much more of a clean target for us, so I am definitely going to mark those out, because that'll be a nice move if we can again get a return to this breaker before seeing some aggressive movement lower. But yeah, you can see how all these levels are coming into play with each other, and it's almost building a defense level. Like the fact that we have this breaker, we have a 4 hour mean threshold, and we have a weekly consequent encroachment all in line with each other with the expectation of lower prices. It suggests that when price comes to this level, we should see a nice reaction away from it, but obviously we're just gonna have to wait and see. Now finally, let's finish on euro. Euro's a bit more ugly in terms of targeting, but one thing to take note of, we did have what we call an immediate rebalance on euro, and when I say that, I mean that last week you'll see we traded into this wick, and this is what you call an immediate rebalance. On lower time frames, this is a high frequency trading strategy, as in if you're in a short position and price trades into a wick like this, and with the expectation of low prices, you can actually short on this, which is nice to see. I have got my eye set on this swing low, but I'm not going to set my eyes on that right now. I am going to bring our attention to this level though, because this is a rejection block level which price could very well trade into. There we go, and then we can drop down to the daily and we can start looking at the highest I want to see price trade to. Now the fact that price ran out all of these stops and filled in this imbalance on Wednesday last week, I'm going to get rid of this. It's now created this rejection block, and what I mean by rejection block is that every time price is traded back up into this level, it's been rejected away. Here it got rejected away, here it got rejected away. Price can come back into it again, and remember, we are anticipating some kind of manipulation. So what is the highest I'd want to see price trade? Well, it's going to be 50% of this wick here. So let's get that drawn out like so. But like I said, euro is a lot more ugly in terms of my reasonability of euro isn't as clean. But that's going to be the highest I'd want to see price trade on euro if we are to move lower. But to be honest, even that might be a stretch. Realistically, I'd like to think that this block here could be respected. But let's drop down to the 4 hour and maybe we can see it, have a little bit more clarity. You'll see that there's a swing high up here with a bearish order block up here that price may want to return to. So that's why I think there's potential for price to reach up here in terms of the manipulation for the week before distributing lower. So that's just something to take note of. On the 1 hour, again, have a nice breaker here. Very typical for price to return to the breaker. So, and you'll see this breaker is leveled here. So again, it's leveled nicely with that weekly midpoint, consequent encroachment. So again, here's more reason as to why I'd like to think that price could rally into this level to start looking for shorts on euro for us to eventually run into these lows. And like I said, maybe that rejection block. So that's going to be everything right now. Obviously, I'll be posting tomorrow. However, Monday I'm not expecting much price action at all. Tuesday I'd like to see some manipulation. Although I wouldn't be surprised if FOMC on Wednesday caused the madness as well. But it's going to be a good week. Make sure to stay safe, low risk, and I'll catch you in the next one. Smash that subscribe button, smash that like button. Peace.